Today, a record high U.S. trade deficit. Americans are buying more foreign goods and services than ever before. What does that mean for the economy? A potential alternative to vaccination? AstraZeneca seeks approval for its new drug that uses antibodies. And in China, another real estate company says it can't pay its debts, fueling concerns about China's property sector, which makes up 25% of the country's GDP. That and much more coming up on NTD Business. Good evening. Great to have you with us. I'm Paul Graney. Some updates on the pharmaceutical industry today. Johnson & Johnson is asking the Food and Drug Administration to approve its COVID-19 booster shot. Didn't say how long after the first shot you should get it, but it says the second shot boosts immunity up to 94% when given 2 months after the first. J&J says protection from its vaccine remains stable over time. Unlike Pfizer's, it says its vaccine becomes less effective over time. The FDA already approved Pfizer's booster, but only for specific groups like people ages 65 and older. The agency will now consider whether to approve boosters from J&J and Moderna at the beginning of next week. And British drug maker AstraZeneca wants U.S. regulators to authorize its new antibody drug for emergency use. The drug could be an alternative to vaccination. NTD's Don Ma has more.
AstraZeneca is requesting emergency use authorization for its new antibody drug, AZD7442. It aims to prevent COVID symptoms and could be an alternative to vaccination. The drug is mainly for those with chronic diseases and other conditions that make vaccination less effective. AstraZeneca says its studies showed a 77% effectiveness in reducing the risk of COVID symptoms in one trial that included over 5,000 participants. It also says the tests suggest the drug could be effective against the Delta variant, though full results have neither been published nor peer-reviewed. The drug was originally developed at Vanderbilt University. The Vanderbilt team isolated 2 antibodies from a Chinese couple who had COVID-19. The antibodies were then licensed to AstraZeneca, which further optimized them. If the drug hits the market, AstraZeneca will pay Vanderbilt royalties on future net sales. And if the FDA authorizes the drug, it will be a first-of-its-kind preventive option. Don Ma, NTD News.
And Southwest Airlines will require all U.S. employees to be vaccinated against COVID-19. It says it's to comply with the Biden administration's new rules. By the middle of December, all workers need to be fully vaccinated or else they'll lose their jobs. That's unless they can be exempted for religious, medical, or disability reasons. Last month, President Biden ordered all federal contractors to be vaccinated. Southwest is just one of them. The company has more than 54,000 employees. Other airlines, including American, Alaska, and JetBlue, have also announced similar mandates for their domestic staff. A strict vaccine mandate has been in place in New York City for over a month now. Anyone over the age of 12 needs to show proof of vaccination to eat indoors. So, NTD's Phil Zoe takes a look at how it's been for restaurants there.
Restaurants, cafes, and more. If you want to dine indoors in New York City, you have to show your vaccine pass. But many shop owners are saying business is way down since the vaccine mandate, including Rocco's Pastry Shop. Italian bakery Pasticceria Rocco has been in business for decades in downtown Manhattan. The owner told NTD News business is down a whopping 50% compared to before the pandemic.
The numbers are dwindling and dwindling each time. I mean, the city's a disaster.
Now with the city's vaccine mandate that started in August, things are even worse.
I think a lot of people are not coming in the city. I can remember Bleecker Street packed full of people, and I don't see it anymore.
Another owner said he doesn't agree with the vaccine mandate, but now he has no choice.
We got visited by 2 inspections. They threatened to remove our liquor license. I have to put my personal feelings aside to protect my 90 employees and protect our beloved business.
Business was down about 40% in the first week when he had to enforce the mandate.
I'll tell you that the first couple of days were rough. We actually had to turn people away.
If I'm hungry, like I said, I have to walk back to my apartment and make my own food.
Generoso Alo says if things keep going this way, her business might not be able to make it.
I would love people to just unite and stop the hate with each other, really, because it's too much hate, and they really should be united.
Phil Zhou, NTD News, New York.
And the U.S. trade deficit surged to a record high in August, over $73 billion. Imports grew significantly as businesses tried to rebuild inventories. Americans bought nearly $3 billion more of foreign products in August than the month before, including drugs, toys, and sporting goods mainly. Imports of industrial supplies and materials also rose, though. Overall, imports of goods and services together reached the highest level on record. Exports also rose, but to a lesser extent. The trade deficit has had a negative impact on U.S. economic growth for 4 straight quarters. So joining us to discuss the trade data is Peter Schiff, chairman at Schiff Gold and founder of Euro-Pacific Capital Management. Peter, pleasure to see you as always. We see the trade data out today. Imports of consumer goods is up $3 billion again. You think this is a sign of the economy recovering and strengthening, or you feel it's still stimulus playing in effect?
Well, it's certainly not a sign of a strengthening economy. Strengthening economies have lower trade deficits because when you have a strong economy, that strong economy produces more stuff. And so you don't need to import as much. And in fact, you produce extra stuff that you're able to export. So these massive trade deficits are a sign that we have too much stimulus, that we're just printing too much money that people are spending. In the meantime, we're not producing the goods that they're buying. And in fact, today's trade deficit was the single largest monthly trade deficit in U.S. history. So it is a record that you don't want to break. The problem is we're going to break it again probably next month. We're going to have a string of record-breaking trade deficits that indicate just how weak the U.S. economy structurally is.
When we say stimulus, I think a lot of people at home say, well, people must have spent their stimulus checks at this stage already. Is it this type of stimulus you think is still in the system or something else?
Well, it's not just the stimulus money that's being spent. People have a lot of borrowing power based on equity in their homes or based on the value of their stock portfolios. And so they're borrowing against those assets and spending. But the transfer payments continue. A lot of people are still unemployed and they have more income unemployed than when they had jobs. And they're using that income to buy more imported goods because we simply don't make the goods ourselves.
How long do you think this stimulus can last for and actually play an effect? I heard some people speaking online about it could just drop off very fast. They call it the bullwhip effect. People won't even see it coming. What do you think?
Well, I think they're going to keep providing the stimulus until we die of an overdose. That's the problem. I mean, they can never take it away because then we'll go into withdrawal. So in order to prevent the withdrawal, they constantly supply us with stimulus. But because the more stimulus we get, the more we need, it's like our tolerance goes up. And so the fact that we had stimulus in the past means we need even more stimulus in the future. So you can never, give up the habit because of the addiction. But because the addiction requires ever larger doses to work, eventually you overdose, and that's where we're headed. And the overdose would take the form of a dollar crisis, sovereign debt crisis, runaway inflation. And we're already starting to see the beginnings of that in consumer prices. I mean, look at oil prices today. We're almost at $80 a barrel for oil. But look at other commodities across the board that have been strong. I mean, look at cotton prices that have more than doubled recently. But, these prices still have a long way to go up, and they're going to go up a lot, I think, in the year ahead. I wouldn't be surprised to see oil take out the 2008 high next year, which was just below $150 a barrel. So we get oil prices, $150 to $200 a barrel. And it's not just oil. It's coal, it's natural gas, it's all forms of energy are going to become increasingly more expensive for American citizens. And not just Americans, but people all around the world are having this problem.
Incredible. Peter Schiff, Schiff Gold, appreciate it.
Sure thing.
The Atlanta Fed is cutting its third quarter GDP forecast again, this time from 2.3% to 1.3%. It sees consumer spending and investment growing slower. It also says the trade deficit will have a bigger negative effect in the economy. Meanwhile, the Fed chair says inflation has proven bigger and longer lasting than expected, raising fears of 1970s-style stagflation. If you don't think we're heading for stagflation, you could argue that inflation, looking at the CPI, is nowhere near where it was in the 70s or 80s. But best-selling author Larry McDonald wrote A Colossal Failure of Common Sense. He argues that if you use the CPI measurements that were used back in the early 1980s, inflation would be running at closer to 14% rather than the 5.3% that we saw last month. So Larry, pleasure to have you on the show. Thanks for coming. Why the change in the CPI?
Well, you know, it's academics control the Fed, and the CPI used to be an index based on real household consumption, the cost of goods. And over the years, they've really changed the modeling to make it more conducive to modeling the data. And you know, they've put a lot of different factors in there that are kind of sell the inflationary components of it. The deflationary components. So the inflationary reality that has come out of COVID-19 is being suppressed or not shown, and therefore, you know, it's really relatively distorted. I would say there's also a huge factor is we have about 100 trillion of debt now in wealth in the world, and if rates spike up, it's a big threat to global financial stability. So there's a very, very strong vested interest in the central bankers to keep everybody calm and in the seats.
Because you feel if word got out that inflation was so high, people would demand that the rates were raised, and this would put pressure on governments to actually finance their operations. Is that correct?
That's correct. I mean, if you do the math, a 1% increase in rates today, based on all the wealth that's in bonds below 2%. There's an extra, since 2018, just to keep it simple, there's an extra 30 trillion in bonds in the world below 2% now relative to just in 2018. So a 1% move up, interest rates up, bond prices down, keep it simple, wipes out a lot of capital. So 1% move up today is equivalent to, say, 3 or 4% move up in the 80s.
Wow. But why do we see bond yields so low? Do investors use the CPI given that it's quote unquote manipulated? Do they really use it to determine their investments?
Well, central bankers have been, you know, claiming and they have some good points around like what we call transitory inflation. All that means is if you picture 20 years, every bip in inflation, you know, right after my book, A Colossal Failure of Common Sense, we had this big fiscal stimulus coming out of the financial crisis. Inflation picked up, and then it was transitory. It came back down. And so the academics argue within the Fed, within the ECB, the Central Bank of Europe, Bank of Japan, they claim that inflation is much more transitory, therefore not sustainable. And bondholders have bought into this. So bondholders have been buying into lower and lower and lower and lower and lower yielding bonds to the point where after the COVID crisis, a lot of bonds were sold, and it's really kind of scary, the amount of bonds that have been sold to investors that are below 2%. So the slightest move up in yields wipes out a lot of capital.
Larry McDonald. And Wall Street ended much higher today. Big tech stocks rebounding after a sell-off the day before. The Dow rose 312 points, about 0.9%. S&P 500 gained 45 points, about 1%. Even the Nasdaq gaining 178 points, about 1.25% today. And U.S. Bank has launched a cryptocurrency custody service for institutional investors, for those who have private funds in the United States and Cayman Islands. The bank's working with NYDIG. It's a Bitcoin-focused financial services firm. One U.S. bank executive says investor interest in crypto and demand from their fund services clients have grown a lot over the past few years. Bitcoin is known to be volatile and it's under growing regulatory pressure. Just earlier today, the SEC Chair Gary Gensler said again that the crypto space is rife with fraud and scams. He said it's more like the Wild West. Still, major financial institutions have been investing and expanding their offerings in the crypto space, including JP Morgan Chase and Citigroup. Bitcoin itself passed the $50,000 mark for the first time in 4 weeks today. And trading app Robinhood is introducing 24/7 customer service support. Tuesday's move takes care of criticism that the app's lack of customer support was partly responsible for the suicide of a client. Robinhood says expanding its customer service support will help users feel more secure about investing, especially in cryptocurrencies. Last year, the company was criticized after a young investor died by suicide. Got a message from the app that made him think he had lost over $700,000. He was then unable to contact anyone to clarify he hadn't. Before, customers mainly had to correspond with the company through email, but now Robinhood COO says users can request a call through the app and hear back in about 30 minutes on average. And one Facebook whistleblower is calling for more government regulation of the tech giant. She testified before the Senate today. But NTD's Phil Zoe spoke to another Facebook whistleblower who has a very different take on possible solutions.
Former Facebook product manager Frances Haugen says Facebook destabilizes democracy and makes young girls and women feel bad about their bodies.
There is a broad swath of research that supports the idea that usage of social media amplifies the risk for these mental health harms.
She's calling for the government to take action.
When we figured out cars were safer with seatbelts, the government took action. And when our government learned that opioids were taking lives, the government took action. I implore you to do the same here.
Another Facebook whistleblower says Haugen is calling for public safety, which he says is ironic.
Well, if we're doing that for public safety, then this no longer becomes a private company issue. This becomes a public forum where everyone should have access. You can't restrict people from the public bus or the public transit system based on their political beliefs.
Hartwig was a content moderator for Facebook and wrote the book Behind the Mask of Facebook, which talks about big tech bias and censorship.
There definitely is too much censorship. If I can't even talk about what a product contains on the internet, whether it's a candy bar or a vaccine, I should be able to talk about what is inside this product.
He says he thinks the best solution is to focus on breaking up big tech companies instead of increasing government regulation.
We should also avoid the government regulating the internet. And since Facebook controls such a large portion of the internet, if the government's regulating Facebook, they're essentially regulating the internet, which the internet was not designed for.
During her 3-hour testimony, Haugen also said she has national security concerns because Facebook is understaffed in the counterterrorism and counter-espionage teams. Phil Zoe, NTD News.
And General Motors is investing big in batteries for electric vehicles. It said Tuesday it plans to open a battery cell development center in Michigan next year in a push to reduce costs for electric vehicles. The battery is a key element to driving down EV costs. GM aims to lower the cost of its batteries by at least 60%. Officials said future products will also extend the driving range so vehicles could go up to 600 miles on a single charge. GM says it expects to spend hundreds of millions of dollars on the new center. And despite strong demand, new car sales are dropping. Experts blame the ongoing computer chip shortage and other supply chain issues. Take a closer look, including when prices may return to normal.
Declining new car sales in the U.S. The auto industry reporting a drop over the last 3 months, despite massive customer demand.
So right now, dealers have very few new cars on the lot, and you can see that by driving by any dealer lot. There's cars up front in the front row, but nothing behind it.
Automakers like GM and Fiat Chrysler are reporting a drop in new car sales, with all pointing to semiconductor supply chain disruptions and low inventory as the problem. The auto industry has been dealing with a shortage of computer chips needed to build cars for more than a year.
We are waiting for China to get those materials because we may have the companies based here in the USA, but they're building those chips in China, and we're getting about 80% of our need. The demand is very high.
And that's creating a domino effect impacting consumers' wallets, starting with chip shortages and supply chain disruptions impacting inventory at car dealerships. And then that shortage of cars leading to record high prices for new cars, which then sidelines potential car buyers who are priced out of the market. One expert says relief from those high prices could still be several months away.
Now, we're worried right now that it looks like 2022 or even as late as 2023 before we can get back up to production. So until that time, expect that new cars are going to be difficult to access.
And another Chinese real estate developer just missed a bond payment. One expert says that other companies in the property sector are likely to follow. NTD's Faye Corder has more.
Another Chinese real estate developer can't pay its debts. Fantasia says it didn't make a $206 million bond payment. It was due Monday. Erping Zhang, a China expert and host of his own China Affairs show, says there's more to come. Besides Fantasia, Cynic Holdings, another real estate developer, was downgraded by rating agencies.
Essentially, that's the problem with the cash flow with these real estate developers. And that will make the firm extremely vulnerable. It's questionable whether Cynic Holdings will be able to pay its $246 million offshore bonds, which is due on October 18th. So that's quite a concern.
This adds to fears about China's property sector. It reportedly makes up about 25% of the country's GDP, and the companies are highly indebted. Now, bonds from other Chinese real estate developers are tumbling because investors are worried they can't repay their debt.
If you look at the average income, the income gap, the disparity, the Gini coefficiency of China is it's mind-boggling. How could they maintain such a high real estate sector with such a weight of the GDP?
Zhang says as a closed society that doesn't follow the market, China has no way to deal with these issues. And a senior economist at Okasan Securities says that the biggest problem is not a default by Evergrande, but the environment that has led to its downfall.
The foreign business analysts should focus on the political calculation over the commercial consideration in all major Chinese business dealings.
China's regulatory crackdown in recent months has shown investors that the regime has little to no consideration for overseas investors. Now, Evergrande's crisis has unsettled global investors, and people are concerned about a potential domino effect. Jiang expects a ripple effect starting with the manufacturing industry. Faye Corder, NTD News.
And still to come this evening. A major union for TV and film workers gives the green light for a strike. Why and what could it mean for Hollywood? And Sri Lanka ends its virus lockdown amid economic worries, but residents are still struggling to find basic essentials. That and more coming up on NTD Business.
Hello, I'm Mike Lindell, inventor of MyPillow. Thanks to your support, you've helped make MyPillow become one of the fastest growing companies in America. Over the last 12 years, you've helped MyPillow create thousands of jobs right here in the USA.
When I got MyPillow, I'm asleep almost immediately. I stay asleep at night and I wake up more well-rested in the morning.
That's why I invented MyPillow. My patented fill adjusts to your exact individual needs and helps keep your neck supported and aligned. I'm interrupting this commercial right now. Retailers have canceled MyPillow, and to thank you for your support, I'm gonna pass the savings directly on to you. For example, you get my 6-piece towel sets, regular $109.99, now only $44.98, or MyPillow dog beds for as low as $19.99 with your promo code.
For the best night's sleep in the whole wide world, visit MyPillow.com.
the final end. The end of mankind. The end of this wretched world. I came as a man of peace and the world bought it. Can you believe that? They even took the mark of the beast. Fools! Why did God even make human beings?
To glorify his name. But we were fools, and many will spend eternity in hell.
May God have mercy on their souls.
But fools are fools are fools. Satan loves fools, and so do I.
Welcome back. Some 60,000 film and TV workers could soon be on strike. In a near unanimous vote, members of Stage Employees Union approved and authorized a strike. The move could stop Hollywood productions for an indefinite period, and it comes after negotiations with the group representing producers broke down. The IATSE is expected to return to negotiations, but wants the studios to know it's serious about getting concessions. At issue, health and safety plus quality of life issues for TV and film and industry workers, including meal breaks and days off. The IATSE has been around for 128 years and says this is the first time it's authorized a nationwide strike. And Sri Lanka has ended a 6-week virus lockdown in a bid to help out its economy. It's trying to ease a decline in foreign exchange that led to a shortage of essential items. NTD's Andrew Thomas has the story.
Sri Lanka lifted a 6-week lockdown Friday as CCP virus cases and deaths declined, but it will restrict people's movement for work and obtaining essentials, which are running short amid economic worries.
This is something that the government has to really think about, because when people are feeling economic deprivation, they look at other people, they look at other communities, and this could lead to inter-community tensions in the future.
The lifting of the lockdown is an effort to boost tourism and reduce a shortage of essential items such as milk powder, sugar, and cooking gas. Long lines formed outside shops in the capital, Colombo, as people rushed to buy milk powder.
Milk is not available in the market, so staying in the queue for 4 people in the house is not an easy thing. You have to stop all the other work and come here, stay in the queue.
Officials and traders said more than 800 containers carrying essentials were stuck in the country's main port due to the lack of US dollars to pay for them.
That is because there's a foreign exchange crisis. There's a big problem where Sri Lanka has been spending all its foreign exchange in repaying loans, foreign loans, and now it needs to deal with this issue of foreign exchange.
Sri Lanka's government has curtailed foreign currency outflows after the island nation's economy contracted 3.6% last year, its deepest recession since independence from Britain 73 years ago. Andrew Thomas, NTD News.
That's the latest business updates for today, but you can still catch NTD Evening News with Stephanie Cox. That's at 6:30 p.m. Eastern. For NTD Business, that's all for today. Thank you for watching. We'll see you tomorrow.
Thanks for watching us on YouTube. Don't forget to catch all of our programs on TV. NTD Evening News is on every weekday at 6:30 p.m. Find your local NTD channel at ntd.com/TV.